should be
If
working now.
I was in charge, we'd be in much better shape.
Like, this should work now. Okay, so once again, if you're just joining us because I don't understand technology, my name is Matt Gregory. I'm with the Verified team, Get Up DC. And all week, I've been intrigued by, I think a lot of people have, the standoff on Wall Street that's going on between individual investors who are like retail investors. They're on Robinhood, they're on their TD Ameritrade, and hedge funds as they battle over what is an obscure stock, you would think, but GameStop. Joining us is Peter Ricchiuti. Peter is a professor at Tulane University. He's our stock market expert, friend of the show. And Peter, give everybody just a little background on who you are.
I'm originally from Boston. I went to Babson College and worked for the investment firm at Kidder Peabody there, and then came down here to New Orleans to manage all the money for the state of Louisiana and the Treasury there. I managed about $3 billion for 6 years, and I started teaching at Tulane in finance. And in 1993, I started a program called Birkenroad Reports, which is a program, the only one in the country, where I take 200 students every year, assign them in teams of 5 to follow a small public company in one of 6 southern states, and they write investment research reports about them. They're companies nobody really follows. We call them stocks under rocks. So my students are the same exact people that are in Robinhood buying GameStop. GameStop. It's just those young kind of excited investors.
Yeah, and one of the things that we were watching over the course of the week, or at least I was, I'm like an amateur stock person. I got like retirement, like a lot of folks do. That's what kind of caught my eye. Can you tell me, and at least for our viewers, what was happening? Like, break that down in terms of just the overall. Then we'll get into like what everything is.
Be happy to. The stock was trading about $20 a share, which I think is probably what it's really worth. And it's GameStop, and you probably know them if you were, if you're kind of in your mid-20s now or so. That's what you remember as heaven. That was where the place you went to buy controllers, or your folks brought you there, and buy video games. And over time, it's the fundamentals of that business have deteriorated, because now you can buy controllers and all that online. The companies really aren't releasing physically anymore. They're releasing new games online. So business has become a lot less attractive. And because of this, we had a lot of, there's about 5,500 stores there out of Texas, a big, big chain. But because of that, we had some investors, big, powerful investors, want to bet against the stock. And that's called short selling. So they set themselves up in a way so they would benefit from the stock price declining. This is used all the time. It's only used by big, big investors, billionaire investors. A lot of times hedge funds might be a best example. And the way they short these stocks and set themselves up to benefit from a decline in the shares is a little strange to most people, but it's very common. They actually go to an investment firm, I'm just mentioning, UBS, Morgan Stanley, any of those firms, and they go in and borrow the shares, and they take them out and sell them. So what we have here is you have a hedge fund that has sold stock they don't own. And their hope is that the stock drops in price, and then they can go back in, buy the shares they sold, and make a profit on the difference. And that's what's going on all the time. And that was what was going on here. Now, these short sellers, sometimes called shorts, are really kind of hated by everyone, little people, big people out there. They're thought of as pariahs or bloodsuckers. And, they've been known to sell a stock that they haven't bought back yet, and then say terrible things about the company in an effort to keep pushing the stock price down.
That's not illegal. That's not illegal to do. That's wild to me.
And of course, if you look at the mechanics, and this would be even scarier, but once again, it's not illegal, is they go to that brokerage firm. Well, the reason that brokerage firm has those shares is because people like you and me that might have owned 100 shares of GameStop and wanted the stock to go up, and were long-term investors, they keep the shares at the brokerage firm. 99% of all stock is held that way, and it's the way everybody ought to keep their stock. It's kept there. If you need to sell it, or you can just do it very quickly. If you get the shares sent out to you, that becomes a nightmare. If you ever lose the shares, it takes like 2 years to replace them and all that. So everybody keeps them at the brokerage firm. And they do a lot of great things in that account. They take care of your taxes and capital gains, capital losses. But at the bottom of the sheet, when you sign up for a form to open an account, there's a little thing at the bottom that's, I believe it's really low. It's like a 6 font, and it's in Latin, I believe, and they tell you Domine Fabiscum etum spiritu tuo, which I got from the Catholic Church. That's not what it is, but what it is it says we can lend out your shares, and you're insured by Security Investment Protection Corporation. You really shouldn't care, but that's the mechanics of where these shares are coming from. So these guys want the stock to drop, and usually if they drop, they'll cover their short and make some money. But this is going haywire on them. The exact thing they fear has happened is the stock is rising. And there's the big difference. If you're an investor like you and I, we can, this sounds terrible. Let's say you have 1,000 shares of a stock at 20. We can only lose $20,000. It can only go to zero. You can only lose all your money. I know this doesn't seem like a very comforting statement, but if you're short a stock, you make money by the stock declining. And when the stock increases, you have unlimited loss potential. There just isn't anything like this. And this is what's happened. The stock was around 20. They were shorting it. And then Reddit and all these folks, what was the guy's name? There was a couple of different people at Reddit that kind of put this together. And they had all these retail investors buy the stock. And it drove it up to eventually about $450 a share, and wiped out some of these big hedge funds. And it really was the little guy versus the big guy. And temporarily, the little guy has won.
Yeah, well, we were talking about it, you and I, the other day, and just to kind of give people some clarity, one of the things is we hear about shorting, and it doesn't sound like a very nice thing, right? You're waiting for a company to just bottom out, and then you're going to invest. But what is the purpose of shorting? Obviously, everything has a purpose. There has to be some sort of material value to the market. Why would you short a stock? What's the value in shorting a stock?
The reason you would short a stock is to take advantage of a coming bad situation that you want to profit. But let's say you had a stock, there was a company out there, and you thought they were going to do terribly going forward. Well, you wouldn't buy the stock, and if you owned it, you'd sell it. But how could you actually make a profit on it? And that's where short selling comes in. It's a great mechanism to actually make money from a company's demise. And it's been around forever. And a lot of people think it equalizes the market. It's a positive force to be out there. But I think a lot of people that do it, the reason the little guy doesn't do it, the reason you and I aren't doing that is that it's the limited gain potential, the unlimited loss potential. Most people can't survive that. In fact, when you talk about, again, opening an account, in order to say that you have the ability, they're going to give you the ability to sell short, you have to show enormous sophistication and money to burn.
Yeah. So that's the interesting thing I think to people is I had a lot of I kept seeing people post on Facebook. They'd say shorting is good for the market. I was like, well, I'm here for hearing that argument about it. What does it do for the market? Does it show the value of stocks? Why would you short? What good purpose would it have in the marketplace?
Well, I mean, the marketplace is supposed to give everybody freedom so that everybody has fairness of information and the ability to make any kind of decision they want to make. And that's really what short selling is. And so it gives investors another way to participate in the movement up and down in the stock. So that's really the only real positive that's happening out of this.
So they short the stock. In comes this army of Reddit, Twitter investors, and they drive the stock price up. So then you have the loss there. An interesting thing was I asked you, I said, these people, when the stock plummets, who are investing, could stand to lose a lot, which is true. But what's going on with options? Is a lot of this leveraged by options?
It really is. And one of the things I wanted to point out before I got into options is that one of the other thing that's driving the stock price up is you get these hedge funds. And these hedge funds know they've got to cover their position. They've got to buy the shares back or they'll have just unlimited loss potential. They try to get out. And when they do, they get out by buying the stock back. And what that does is create another enormous wave of buy orders, which drives the price up even higher. And that's called a short squeeze, which is very different from a main squeeze, which is a whole different subject. But that's what's going on. And so finally, these people who are relatively small investors, they have realized that there's something better than owning the stock, and that is to buy options, which is basically put down a very small amount of money and control a lot of shares. And the returns are they're leveraged, and leverage is a double-edged sword. If you're right, you're really right, and if you're wrong, you're really wrong. And so that's what they're using now, and they're using all these options, and the amount of volume in these options is just through the roof. And so it's a new vehicle. It's not a new vehicle, but it's a new vehicle, I think, to the Reddit people. And the Reddit people, by the way, they might be small, and people are saying, they're spending their stimulus checks, which is probably not a good idea. But they've obviously got a few very sophisticated investors helping them along on this. And because now the problem is, and this is the big problem, is that at some point you can say, oh, I bought the stock at 20 and now it's at 450, and I've got this enormous gain. Well, you've got a paper gain. You don't really earn the money until you actually sell. And so one of the things that could hold the stock back, and probably will, is that at some point people want to take their profits. And when they take their profits, they're going to sell the stock, and those sell orders are going to push the stock back down again. So I really feel, to totally be honest, I think there's going to be a lot of tears at the end, and I think it's on both sides. I can't picture a hedge fund manager crying, but they too would be crying.
I was going to say, it's a lot of people want to think of this in terms of good and evil, right versus wrong, but I kind of think of it as sort of bad seeing everyone's fault.
Oh yeah, you can.
I didn't know if that was an accurate way to put it. We're getting questions from people on Facebook. Tony on Facebook, thank you for watching, Tony. Wants to know, is there a list where we can look to see how much of the stock is shorted, or where the stocks are being shorted?
Yeah, you can. That's the most amazing thing when you think, why didn't this happen 10 or 20 years ago? There wasn't social media to gang people up, and you didn't have access to this kind of information that we do about public companies. If you just go on the internet and you just type in largest short positions, they will tell you right there. And if you want to just look at a specific company and figure out, here's a company, I wonder how many shares are short, you would just go to www.shortsqueeze.com. And we use that in class all the time. And it gives in one of the things I always used to say about that, which didn't really click to anybody until now, is that when you see a short position, you could look at it as two different ways. Either that's a real bearish sign, really negative for the price, because supposedly the smartest people in the room must think the stock is going down. They hate this company. But the other side is just what we're seeing now. If they're wrong and the market goes up, that squeeze will make it go up tenfold. So you could look at the same piece of information that there's a lot of shares short in this company and interpret it two different ways. But one of the things they're doing here is they're looking for companies that aren't gigantic, that don't have that many shares that are available to trade, and looking for big short positions, because that's the way these companies, these big investors, could be trapped. And by the way, we're talking about huge money. I think one of the guys who has lost his shirt just bought a $44 million condominium in Miami. There's really no reason to worry about these people. It's and the funny thing is, Congress is in a very peculiar situation. If they come in talking about how this isn't fair to protect the short sellers, it just seems more inequality. And so now they're trying to get in on the other side of it, which is, I'm afraid for these retail investors that bad things are going to happen to them, and very much could. But to start out by protecting hedge funds, I mean, there really is no group that deserves less protection than hedge funds. Really,
that seems like difficult messaging to sell as a politician. If you even if we find that there are hedge funds behind some of the the Reddit people, it's A question for you here is about Robinhood halting the purchase of stocks. I guess basically, I've heard a lot. I've heard the Robinhood CEO talk about it. I've heard, obviously, the cries on the internet of people saying this is market manipulation. What happened? Why did Robinhood, stop selling? Or from what you can tell, why did they stop allowing the purchase of stocks?
Well, they would say that, to kind of stop this circus and slow it down. But the real reason is that an investment firm needs a certain amount of liquidity. They've got to be able to show the rest of the marketplace that they're financially in good shape and they can move securities between one firm and the other, and everybody's okay on it. They can move during the day, and they'll know it'll all be settled by the end. What people are afraid of, and Robinhood says this isn't true, is that they don't have the liquidity to do that, and then nobody wants to swap securities with them. If this sounds familiar, it's exactly what happened in the '07-'08 financial crisis.
I was going to ask you about that because I was listening to Robinhood CEO. He said, I had to halt it because, and he kept saying regulations, we have regulations. But if I'm not mistaken, you have regulations that require you to have a certain amount of liquidity on hand to pay out, right?
Right.
And that would explain why overnight Robinhood asked for $700 million to borrow from banks, something in that neighborhood.
Yeah, I'd heard that too. And, the company's very upfront about that. They are not close to some sort of liquidity problem. But when you look at the stopping of the trading, and then you look at some other things, it makes it clear to me that this is what they're worried about, at least. And I saw that it was just about a half an hour ago. I heard that one of the firms limited, you could still buy Robinhood shares. So they didn't want to say they closed it, but you could only buy one share at a time. That would really take a long time to get a position. You'd have carpal tunnel syndrome before you actually owned 100 shares.
We got a question from Denise on Facebook. Denise, thank you for watching. How can hedge funds legally short more stocks than they float? GME at one point was shorted about 150%.
That is a real question. I don't really have my arms around. I've heard that as well. This is one of the things you look at here is these are called up until 100%. These are technically could be covered positions where there's somebody's short, but they also might have a long position. These are what are called naked shorts, where there isn't even access to the stock that they've shorted, and this never happens. I mean, if you look at shortsqueeze.com, you'll see that the percentage of stock that's being shorted might be, I don't know, maybe 10, 15%, not 150%. And of course, the shorts, what they would like to do right here is either get out of their positions or average down, which means that, if I shorted some shares at 20 and the stock's at 100, I'm going to short some more shares there. And if it's equal amounts, now my break even is 60 or so instead of going back to 20 before I break even on this trade. So it's very, very peculiar. The thing is, though, if this was a one-time shot, you and I would say, well, this is interesting, and we'll talk about it in the history books along with other great financial issues. But it's not. It's going from stock to stock. There, you heard AMC, which owns the movie theaters, another company with a terrible outlook going forward. People weren't going to the movies before. Now, a year cooped up, we've all figured out how Netflix works, and they're probably not going back to the theater. And so a lot of that, the stocks they've shorted made sense for shorting. They had difficult futures ahead of them.
Yeah.
And yeah.
And that was one we got was someone just said they were shorting shares that didn't exist. Is that what naked shorting is?
I would say that's a pretty good move on it. That's the way I would say. And of course, the thing that you think about doing here is to have GameStop issue shares, just issue a zillion shares now, do a stock offering, which it can as a public company, and try to sell shares off at these ridiculous levels and get the cash in. And if they did that, they would become, I don't know what they would become, like an investment bank. They would have so much money they didn't know what to do with. And they would probably say, I never liked selling controllers anyway. So it's there's so many things that could happen.
So they issued stock right now. Let's say GameStop were to do that. People would buy in. They would then have cash on hand. The cash on hand they could turn into their own bank and just get out of video games altogether.
Yeah, they would pay off the the management, give them all big bonuses. Just be a festival. I mean, I can't imagine working for GameStop. I sat on the board of a couple of companies, and nothing like this ever happened. But the idea that you could issue shares that were ridiculously valued, and you just took advantage of the market would be phenomenal.
Yeah.
It because I mean, you got to think to yourself before all this happened. Analysts and everyone else were saying the stock was worth about $20. So how can it possibly, be? I mean, I think that's where it settles when it's all over. Um,
Yeah.
and if you're, go ahead. I'm sorry.
I was going to ask you. One of the questions people I've seen three of them now. We've got Simone and Jake want to know: should they get out of Robinhood and move to another platform?
That is very interesting. One of the things I mentioned, of course, is you got to sell before you make the money, and yeah, and I think one of the problems is that it's just human nature. Even though Reddit's telling you to hang in there and all, if you've made a good profit and that stock starts to decline, you begin to think in your head, I don't want to give this whole thing up. I don't want it to ride all the way back to where it was before. And that's why I think you're going to get people making that decision to sell, and that those sell orders just keep connecting to each other, and you do just start pushing the stock back down again. And you look at yesterday, I think the stock traded between $120 and $460. That's not what happens in the real world. This is and I think it's the big thing long term that I worry about is it destroys people confidence in the market. People have their college savings fund there and their retirement fund, and it looks like a game. And which I think the great irony, and I don't think it was lost in people, is to short GameStop because it's talking about the gamification of Wall Street. And damn, this one is just there. If you miss the point, why don't we just do GameStop? And of course, a lot of the ages of the people doing this remember GameStop. It was a great source of enjoyment.
Well, I was going to say we're getting a bunch of questions now where people are saying, should I short GME now? Should I short GameStop now?
Geez. I mean, only if you really recognize the amount of risk you're taking in there. It's just, if those Robinhood folks and everybody else keep buying the stock, who knows where they could drive it to temporarily. And you could say to yourself, wow, if it goes way up, I don't care. I know in my mind it's only worth $20 or so. But there was the quote by John Maynard Keynes where the markets can remain irrational longer than you can remain solvent. And that's the problem in here. He was a very smart man.
Well, one question that we had gotten yesterday from a viewer was, with all of this, as we're watching it go on, let's say you have a Fidelity, a Vanguard, 401k, retirement fund. Is any of this affecting you directly, or is it more of a longer, drawn out process where the effect of the market will affect you? Like, would these hedge funds be invested with you? Would GameStop be part of your investment thing if you had a 401k?
I would think if you had a mutual funds can't short stocks. Mutual funds operate under what's called the prudent person rule. They don't put all the money in one stock. They don't borrow money to buy stocks. They don't sell stocks short. So you're not going to participate in that sense. You might very well have a mutual fund that owns shares of GameStop, and you might have benefited, but you wouldn't have anybody that had shorted the stock. But I think it really does undermine the confidence of the markets. And I had a class I taught last night, and it's just so funny. I mean, we teach investment research, and I had laid out a nice agenda, and the students for an hour, and the students would not let me get to it until we had to spend 30 minutes on GameStop before they would allow me to teach the rest of it. Of course, and the rest of it sounds like you're a crazy person now. The other stuff that it's priced to a company's earnings or priced to a company's book value seems like a crazy thing to lecture about in an environment like this. But I think over the long run, it always comes back to fundamentals of security valuation. And I think it will now. I think I actually heard two students leaving the class using the word dinosaur. So I think maybe that was implying to me, but I don't. I think it still counts. And the other thing is this market was very, very overpriced, and a lot of stocks, particularly tech stocks, were selling at ridiculous levels. And so that was the backdrop on this. And the whole reason this is happening is that the Fed needed to rejuvenate the economy, and they lowered interest rates to basically zero. When they did that, people had nowhere to. You couldn't make any money in bank CDs or money market funds, and they began searching for homes, and so much of it ended up in the stock market. And that's what's made the market so overvalued. And I will tell you, when you look at bear markets, the way they kind of start in situations like this, where everybody's so optimistic that, and then what makes the market go up is you have additional optimistic. Well, if everybody's already hysterically optimistic, what's the next group that's going to come along and buy these shares? So I think it's a spooky market overall, way past the GameStop part.
There
You know,
might
you're
not.
supposed to be buying,
Oh,
yeah, you're supposed to be buying stocks when they're cheap and when nobody wants them. This is the opposite of that.
a random question, just because you talked about the speculative nature of the market right now, right? Um, from my understanding, and I could be wrong here, we saw like a large amount of speculation grow from the 80s, 90s, and the aughts with tech stocks, because tech stocks are always, it's like a speculative thing. You buy Tesla even though it's never turned a profit on what it could be.
Right.
Has so much of that bled into the stock market that now we're seeing a completely nearly speculative stock market?
I think it's really been split in half. For instance, if you one of the big sort of jokes people tell all the time is you have the S&P 500, which has obviously 500 stocks in it, the largest 500 companies. But there are five big tech stocks, so basically Microsoft, Tesla, Facebook, Apple, and Google, that really dominate that average. In other words, 20% of the average, those 500 stocks, 20% of that average is in those five stocks. So when you look at the market, the S&P 500, you think that's the stock market. It's totally being skewed by these few large tech companies. And the truth of the matter is the rest of the market isn't that expensive. You know, you look at companies that are in machinery or retailing or such like that. You've got very good companies selling at very low prices, but nobody cares. You start, I go to cocktail parties or crawfish boils down here, and when I tell them the stocks I'm interested in or the students are following, before you know it, I'm alone. They just take their drink and leave. There's nobody has any interest in this. But over time, that's how you make money. And I also think, by the way, that people are going to have such a skewed perception. The market, on average, rises 10% a year. Some years is more than that, some years is less than that. But now, and that's actually over time compounded a very good way to make money. But now people really think they're going to make like 150% a day or something like that. I just don't know how you get the genie back in the bottle for these people.
Yeah, we've had a bunch of people on the Facebook chat who keep saying sort of the same thing, which is times are changing. There's a power shift. You've got everybody's upset when it's nobody's upset when the little guy gets hurt, but the big guy's getting hurt. So one of the things we were kind of discussing is like, what is this going to be a permanent shift, or is there like regulations that'll come in?
I don't know what they would really do to regulate this, to be honest. It's not, but I think there is a big shift coming, and that is these big money managers that are in fact shorting stocks. Now, most of them aren't. They're just gigantic money managers with big investors, and they buy a stock and hope it goes higher. But these short sellers, I think the game is going to change very much going forward. They always knew there was unlimited loss potential. I mean, these people got MBAs and things like that, but they never really thought it would happen. And I think there's going to be a real decline in the number of big, really anyway, and there's going to be a decline in anybody that wants to sell shares short. I mean, they really do. I think when short sellers get old and they're in their hospital bed and they see their children, the last thing they say is, "Robert, don't ever be a short seller," because this is the way it's gonna go. And so I think that one piece of the market, I think, is going to diminish a great deal, because you never know now where they're coming from. You don't know if it's something that you've sold short. In fact, now you really think about it, is I'm in there selling the stock short, and that's what attracted people to attack this.
Yeah.
So it's
somebody on YouTube is asking, is it too late to jump on the wave?
Yeah, I really think I wouldn't short, because it's just too scary with the unlimited loss potential. On the gain side, you got to feel it. Trees don't grow to the sky. You can't think that this is going to last forever and keep going up more and more because people are going to take their profits, and that is going to supposedly put some sort of lid on it or some pressure from the um, pressure from the top to keep the stock down. But all the people, you should see that one of the things I love, I watch a lot of CNBC and all, and there's these analysts that come on, which is what we're training students to do. And if they're following GameStop, they have all just quit. There's not to quit the firm, that would be very bad, but they don't follow the stock anymore. It's like, I just threw up my hands. This isn't the way Professor Ricchiuti taught me to do things, and I'm out. So
it's got to be a little bit confusing because honestly, to me, you watch CNBC, you watch Fox Business, what have you. In the background, it's just white noise. Something's going on, and it's usually catered towards like that hedge fund investment banker class of people.
Right.
When you talk about like Reddit, that gives a forum to like the individual retail investor, like the little guy. I mean, is it a case where CNBC's ignored this class for so long, or this little group, that now they don't really know who they're talking to?
I bet that's true. Now, if you ask them, they would always want a larger and larger market share. But I got to think. The funny thing about those TV shows with the about the stock market is whenever I go to like a trading room or really just go to a friend's house, everybody's got it on without the volume because they're just watching the tape along the bottom and the and the recording. So I don't know. It would be difficult to say what their market is since no one has the volume. But it's
yeah, it's interesting because I think as we've kind of gone through this process, people have learned a little bit about the stock market. I know that one of the things when I look at like short selling, like that's complex as it is because you're trying to explain to someone that you're essentially borrowing something to sell it. But in the real world, you can't actually borrow something, sell it, and turn around and get it for cheaper and bring someone back their thing. Like as we were discussing, I was like, people keep trying to equate it to something in the physical, tangible world, but that's not possible.
No, absolutely not possible. There's really, and I've spent a lot of time the last couple of days trying to come up with some analogy like muffins or something. It just doesn't work.
No. Somebody sent me one about clothes the other day. I was like, I don't get this. I'm having my hardest time. They were like, all right, it's a friend of mine. He's like, you get shoes, and I gave you the shoes, and now I'm going to wear the shoes. I was like, just stop with that.
Yeah, no, they are.
We had a question saying, does this mean hedge funds will restrict going forward? I don't know, even though typically. I guess the general question they thought was, because this happened, do you think hedge funds will now not quite look at short selling because it does have this potential to draw the ire of the market, and specifically with individual traders?
I think that's absolutely true. I really do. I think there's going to be still short sellers because it is a free market and capitalism and such, but investors are going to be more reluctant to give their money to a hedge fund that does short selling. They always knew it was kind of a nasty business, and that was okay, I guess. But they knew there was unlimited loss potential. I mean, people knew it on one level, but they never thought it would happen to this kind of thing. I remember, you couldn't envision. You could see, for instance, what it's about is, let's say a company. This is what it should be about: is a company is going to announce earnings 2 days from now, and you've done your work, and you think those earnings are going to be a lot less than Wall Street thinks they're going to be, and that'll cause the stock to drop. And you would short it, wait for those earnings to come in. If they're crummy, the stock drops, and you cover the position. And if you're wrong, and it's a little bit better than Wall Street thought, it'll go up a bit, and maybe you have a little bit of loss. But not this. This is just a whole.
It's very interesting because the first time I think most people heard of short selling was when you look at I think it's like 5 or 6 people that shorted the housing market. Other than that, it just flew under the radar. Is this a case? And not as so much as a case, but one of the things I've wondered is this something where we're seeing short, which is a tool of the market, shorting a stock is a tool of the market in the same way that at one point adjusted rate mortgages were a tool of the market. They all serve some purpose, but perhaps the purpose has been manipulated beyond its good usage, or is this not that much of a turning point yet?
Not quite, but it's been exposed as maybe that's the way we ought to look at it. And, that was the interesting thing. I mean, a lot of us knew that the housing market had reached some craziness in in those years, about 2007, 2008, but we couldn't figure out a way to profit from it.
Yeah.
You really couldn't. You could short sell the home builders that were publicly traded, but there was nothing perfect. And this, of course, is very perfect, pretty easy to do. And one thing I'd like to emphasize, though, is nothing has changed at GameStop. They aren't selling anything more. There's no lines around the outside of the building, hoping to buy something. Nothing has changed. In fact, for the company itself, all this change is kind of on the periphery. I mean, they don't have more revenues and more earnings per share. They just have this security. One of the things people get wrong is they say, well, investing in the stock market is investing in America and all that. The only time money changes hands is when that company first goes public, when it does its IPO and it gives up some shares, and then investors put cash into the company. And after that, it's just a casino. It's just people buying and selling against each other. Nothing to do with the company. Absolutely nothing.
Yeah.
And so,
one of the questions I just got that came in is, can you explain more of why you would not short? And I know you're probably tired of answering that question, but what's the reason? It's the risk that's involved in shorting a stock, especially one right now, just because it's up so high, it's going to come down. You could be limited.
Yeah. But that's the amazing thing about the markets is that might happen a long time from now. And it may go up a lot higher before that happens. And if you were short the position and you knew in your mind that you had to go back in and buy that position back, there is no way you could sleep. There would be that you would end up in a crazy house somewhere because you couldn't. How could you ever go on about your life doing that?
Yeah.
If you have a stock and it goes down, I mean, you're not happy about it. You might have a couple of beers that night, but that's not the way this is going to be. And I think the tough part really is that it's kind of stock that like young bros love talking about, like at a bar. It's like, yeah, sure, I got the option, and that, that's probably a good way to meet girls, but that isn't really the way to invest. This is a terrible way to invest. And one thing that people figured out yesterday, because yesterday the stock fell quite a bit, and then today it rose. Well, one of the things is if a stock falls 50%, like let's say a stock goes from 10 to 5, that's a 50% loss. You then need 100% gain to get back to where you were before. So, and that's the math that makes it so difficult when you have this kind of volatility. A 10% stock to $5 is a 50% drop, but to get that $5 back to 10 is 100% gain. And so you've got to talk. I mean, that's why big declines can just club. You'll never come back from some of these.
Another question we had is, will this action keep GameStop from failing?
No, it has nothing to do with GameStop. It has something to do with the ticker symbol, and that's about it. Unless, and I don't think this would be that easy, unless they would issue new shares and just reap the benefit of this craziness. But that might not be as easy as I'm saying it to be.
And this is kind of a question because a lot of people have seen this. When you go to Reddit or when you're looking on social media things, they're saying, well, this is the little guys taking on the big guys. We've changed the market forever. And all I can think of is this is one aspect of the market that is controlled by a billionaire thing. You also have the dark pools, high frequency trading. You've touched one portion of it.
All that. Yeah. This is just taking a very small piece of the market. And I think it's going to put a real dent in short selling. But that's really what it is in here. And you know what I fear too is that when you talk to people and you ask like, this is true, yes. First of all, when they say I'm playing the stock market, that's a bad sign. It should be I'm investing in shares or whatever. But you hear people say, "Oh, I'll never be in the stock market." Geez, I lost my shirt on that. And you ask, what did they do? Well, they did something incredibly stupid. It wasn't like I put some money in the Fidelity Magellan Fund and I was totally wiped out. No, you weren't. You had to really be following some rumor, some crazy trend, some company with no earnings or ever hope of earnings. You did it to yourself. And then you're convinced that the stock market is not the place to be. And and we should burn the place down. And it's but because nobody wants the way you really. I have been doing this for 40 years. I've known hundreds of people that have made millions and millions of dollars, and the way they made it was to buy good stocks or good funds and sticking with them over time and letting the compounding of the dividends benefit you. And it's kind of amazing what it does, but it's just not sexy.
It's the overnight win is always better than waiting 50 years to get your money.
Oh yeah, yeah. Like I tell people, it's different stocks I've owned. I said, it's tripled since I bought it. It's like, when did you buy it? I said, like 10 years ago. It's like, oh, I'm no longer interested in this story.
For people who are watching and who I know a lot of you have said this, so like, the Dow's over 30,000. We still have high unemployment. We have a complete cap on economics in the country as it is because of the pandemic. What does this say about the market? Because you've said it before, there doesn't seem to be any correlation between the stock market and how people actually live at home right now.
Yeah, and one of the things is the fact that you'll hear people say the stock market is a leading economic indicator. It's usually 6 to 9 months ahead of the economy. So what the market is telling you is that things will be better towards the back end of this year. And here's something you would not have thought of, is that in the third quarter this year, 52% of the public companies earned more than they did in the third quarter of 2019. Now, that's just startling. You would think they all earned 10% of what they earned the year before, and they didn't. And I think that's one of the big changes that's going to come from the pandemic. These companies have gone through hell and high water, but they're not just sitting there. They are figuring out ways to be more productive. And I think, I don't know, but it's half the people that are unemployed right now aren't going to have those jobs back. And if they do, they're going to be very different jobs. People have figured out a way to make more with less during the pandemic. And I think that's one of the big economic problems that we're going to see going forward. The other thing, and I think this is such a potential disaster, is income inequality, wealth inequality. It has never been like this. And so you're getting, people talk about a V-shaped recovery or U-shaped recovery or W-shaped, just to show that you know all the letters, I guess. But the one that people are talking about now is the K-shaped recovery. And what that is, kind of a funny little line to look at it, because the whole economy collapses, everybody gets hurt, and then the Fed comes in and rescues the economy. And they don't mean to do this. I don't think this is their goal at all. But they rescue the economy by lowering interest rates dramatically. Well, what that does is that turns around and benefits the rich people because they own stocks, bonds, houses that are very, very tied to interest rates. That's what pushes them. The rest of the people keep sliding down the hole, and they've either got no savings, or if they do have savings, now they're getting nothing on it in a bank CD or a money market fund, which they're more likely to be invested in. So this is causing a huge trauma. And I think the long-term implications are going to be brutal. I don't know when they start, and I don't know if maybe this attitude is already an example of it. But you have the situation where, let's say, 1786 in the French Revolution. I remember you and I were both there. It was a very interesting time.
Powder wigs and all.
Yeah, that lady got her head cut off. I know that wasn't good. But if back then, the top 3% of folks in France, which they called the elites, held 30% of all the wealth. Today, in the United States, the top 3% control 40% of the nation's wealth. I mean, something gives. There really something gives in here. It just has never been this unfair. And I mentioned the Fed lowering interest rates. There's a good example where it's certainly not being done on purpose. Jerome Powell, the head of the Fed, has come out numerous times and said the biggest financial challenge the United States faces going forward is income and wealth inequality. And yet, that was his bullets in his gun, was to lower interest rates, and it further spread it. I know he didn't want to do that, but it really makes you wonder. And then when you look at the way jobs, just look what happened during the pandemic. You and I could work from home. I could teach from home. You're working at home right now.
Home, yeah.
Yeah, or a very weird office. I don't know, but it's but yeah. And so we kept working. I had a son that was working. His girlfriend worked at Starbucks, and they were completely closed for all that time. And so once again, the people at the top, or the more educated people, or the more white collar people, did not fine, but a lot better than those that were down in the trenches. And that, I think, this kind of animosity is really going to build.
Mhm.
And in fact, I actually think a lot of that is what was behind, not completely, but the Trumpers and breaking into the Congress and all that, is people are really split here. That the haves and the have-nots, and the have-nots, the future looks really bleak. It really does. I mean, at the university, we're teaching at Tulane, and parents always ask us this question, is like, why don't you teach coding or something like that? Well, in a few years, that's not going to be a big deal anymore. So we're trying to teach, we're teaching them to succeed at careers that don't exist yet. Well, that, first of all, it's the thing to do, and will make you smart, critical thinking, and you're going to be okay. But that's a tough thing to compete against unless you're at a university. It's everybody else is just being trained for specific things. And I think if you look going forward, I do a lot of visiting of companies. That's what we do at Burke Road Reports. And I just see this more than anyone else. I go into a brand new factory, and it's huge. It's like it's like 6 Superdomes or something. And you look at, and damn, there's about 6 people working in there. There's
Mhm.
nobody. And it's all robots. And I always remember I had my sons with me for one tour, and they must have been 8 and 11. And they got a nice tour, and the management was there. And at the end, the manager said to us, the 3 of us, one of my sons says, "It just seems like there's not many people. It's a lot of robots." And he looked at us and he said, he goes, "Yeah, you know what I like about robots is they don't have fights with their wives. They don't come in hungover. And of course, my kids are like stranger danger, And but that's really what's going on. It's sometimes it's exciting to see a new plant built, and you think a lot of jobs built in the plant, probably not a lot of jobs in there.
Yeah, it's something you've heard about all year, which was like the whole the robotization. Like, I guess the idea of having everything being done just computers. When we saw, I think it was like when Andrew Yang was going across the country, he was talking to truck drivers because they're going to automate truck driving in the next 15 to 20 years, which sounds insane right now, but it's very likely. Yeah, the word I was looking for is automation. I don't know why I said robitude or something like that, but automation is the word. The automation of the U.S. economy will be a big issue coming up. And
well, let me give you a great example. One of the companies we follow is the largest owner-operator of flatbed trucks, and those are the trucks that kind of move big Caterpillar tractors and all those kind of things. So I was with the CFO at a meeting, and I asked them, I said to the CFO, how long is it before you're going to have electric trucks and driverless trucks? And he said to me about the most honest thing a man could say. He said, "Peter, I'd give you a date, but it's before that." And that is kind of the answer for technology. It's faster than you think.
It's insane.
And yeah.
Well, that's all we're going to do, because I think we're losing our little stream here in a second. But thank you so much, Peter Ricchiuti from Tulane University, New Orleans, for joining us, stock market expert, giving us a little bit of light of what's happening, what happened regarding GameStop and the Wall Street standoff. And we look forward to hearing more.
I just want to be friend of the show. That's really was the whole key to this. Thank you so much for having me on.
No problem. Thank you. Peter Ricchiuti, everybody. Thank you.
Bye.